Hello champions, how are you doing? Well, since the lockdown has happened, I have had several conversations with people where everybody has been asking, what is the government doing? Why aren't they doing this? Why aren't they doing that? So many conversations have almost been like, why is the government not making my business work? Now look guys, this video is dedicated to answer that very question. This is like a 101 on economics and why you should know this and why it impacts you. I'm obviously going to cover how you should be thinking about your business and therefore action in this current situation. So keep watching. Welcome back champions. Now I'm going to do an economics 101 for all of you guys, and it's extremely important that all of us understand this before we start saying the government should have done this or the government should have done that. And I'm going to make it very simple for all of you to understand, so don't worry. My reference point for this video is going to be the government's economic package that it was released. No, I'm not going to blow holes into that. No, I'm not going to review that. All that I'm going to do is educate you on what that package is made up of, what are the thoughts that go behind it, so that you understand how economics work, how it impacts your business, how should you be looking at your business and actioning therefore. The economic package has two components. One is a fiscal policy, the other one is a monetary policy. Fiscal policy is something that is ruled and governed by the government of India. Monetary policy is governed by RBI, the central bank of the country. Let us look at the monetary policy first and what it means. Monetary policy means reduction of interest rate at all levels. You must have heard this term called repo rate. Now, without getting into technicalities of it, because I promised you I'm going to make it simple, it's nothing but the RBI says I will reduce rates for the bank to borrow money from me. Now banks say I will borrow money from RBI and I will remain stable. How? By doing my business and by making sure all the dents that I had in my business are filled up. By dents I mean all the bad loans that I had. By doing business I mean I give loans to the right kind of businesses. Now the banks therefore will disburse loans only to the right kind of businesses. Now, why does the bank do that? Because when the loan is disbursed to the right kind of businesses, only then there is a recovery. Otherwise, it turns into bad debts. What is the right kind of business? The right kind of business is a business that can grow, not only survive, but can grow. Because remember, if you take 10,000 bucks as loan, you don't have to service only that 10,000. You got to pay back 10,000 plus interest. That is going to come from the growth. So if you are somebody who's not got a bank loan, or if you are somebody who's looking for an investor, this is the question you must ask. Why don't you sell your own house and put money in your business? Answer to that normally is it's risky. What is risky? Risky means you are not sure if your business is going to make that kind of money to repay that risk or the damage that you're going to make by mortgaging your house or any of your assets. Now, if you who's going to run your business, if you who have absolute control on how your business car is going to navigate does not have confidence, why should an investor have a confidence? Why should people in the banks have confidence? Now, you may say, Hardik, lot of things are uncontrollable. Well, whenever there are uncontrollable things, you navigate, right? When you see a roadblock, what do? You don't stop your car and wait there, right? Do you? No, you change your route. That means changing the way your business works, changing your business model in view of the current situation. Therefore, your business becomes financeable. You may also ask me a question that Hardik, in the last scheme, the government was saying give the loans without asking for extra protection. That is true. But remember this, assuming a bank gives a loan to a bad business, what is the result? The bad business will only at best survive. When the business just survives, he is not able to repay the loan, which means what? The bank will have a bad loan. And that means what? A business that can survive, that can grow, is not getting the money. Would you want to put your money in bad hands? a hand that is only going to survive but not going to grow. No, right? In the same way, the banks also must not do that. Now, coming to the fiscal side of things, the fiscal policy, which is governed by the central government. Now, how does a government do this? Well, the government kind of reduces the earning or invests directly into the industry. Now, what does that mean? The government may say, okay, you know what, it's 18% GST, let me reduce it for the reasons of easy calculation, let me reduce it by half, make it 9%. Now, what that means? That means that your sale price gets directly impacted. But the assumption here is that when the sales price gets impacted, you will grow. That's the assumption. It's not for survival purposes. It should never be for survival purposes. Because if these fiscal policies are announced, and then you don't grow, what it results into? Every time a fiscal policy is announced, the government says, give me less money. The government does not say, I will spend less. The government spending on infrastructure, running the railways, etc., is all money required, right? And all of that money is required so that we get facilitated. Now, when the government spending is not changing, but the government is giving incentives and GST decrease, that means what? That means there is a deficit that is created. Now that deficit, how do you think is serviced? That deficit is filled up by the government asking RBI to give them money in exchange of some securities. So if the RBI has given money to the banks, which has resulted into bad loans, RBI does not have enough money to give it to the government for the government to reduce taxes. So it's a vicious circle that we get into. Now, when a government introduces a fiscal policy, which I am assuming the government should do and must do, what happens? All of us get direct benefits of that. Now, when we get direct benefits, what we have to do? We have to make sure that with that benefits, we grow substantially. Let me explain you. Assuming your product price is 10 rupees. Now, when you reduce the product price from 10 rupees to 5 rupees, you still are not reducing your expenses to run your house, right? If you require 100 rupees, you will still have to sell, guess how many times? 20 times, which means you got to go double in terms of acquiring new customer or selling per unit, simply because you've reduced it by 50%. Your price is reduced by 50%. And if you don't, then you will have a deficit loss. In the same way, if the government reduces GST, for example, as a fiscal policy, we will all need to be able to sell more and double up to not have that fiscal deficit. Now, you may say, so what if we have a fiscal deficit? No, there is a problem. If we have a fiscal deficit, then we will have to fill that up. As a government, we'll have to fill that up. And where do you think the government will fill it up from? It will levy taxes again, which means that if the government gives us a fiscal policy today, reduces the GST, and I'm saying reduces the GST because that's easy to understand. There are many other ways in which this can be done. If reduces the GST from, let's say, 18% to 9%, 50% reduction, and if we don't increase our sales after getting that benefit, we just choose to survive. Okay, you know what? Things are going good. No, relax. What happens next? The next thing that the government will have to do is increase it back. And this time it's not going to come at 18%. It may come at 25% because the gap that was created was filled up with interest and loans from RBI or from somewhere else. So my friends, please understand this. This is the time where we have to think of growth. If you want the government to invest, the government or anybody is going to invest only if the invested money is going to come back. It's not raining from the heavens. But whatever we take, we have to give it back with interest. So whether directly or indirectly, it is going to come back. So if we really want the government to spend in us for us to come out of this dark hole of financial losses, we got to be doing our part well, which is growing the business. And if your business model is not tuned to the current trends of how the world is working, then growth is a very limited opportunity. Now, if you've understood this concept very, very well, I have something to offer to you for free. On 8th of August, which is tomorrow, I am doing a webinar free. It's called Get Set Online, because getting online was never important than it is today. Come on that webinar. I will clarify all the doubts that you have on whether your business should not go online. If you should, what platforms do you have available for you? What is it that you can do on that platform, and at low cost or no cost? So come to that webinar and do your part of the economic revival again. If you like this video, do hit a big fat like and share it with anybody and everybody who's cursing the government, or who's saying, why is the government not doing this, or why is the government not doing that? Well, the government must do what it needs to do, no taking away from that. But let us explain to people what it really means if a government does it. And there is a role that all of us have to play. So share it with your friends and family. If you've not subscribed to this channel yet, please do subscribe. I'm going to keep coming up with videos like this, which will help you out of this current situation. So until we meet next time, keep propelling.